Once again, welcome back to Anu's Learning Zone. This is an introduction video that explains some of the basic things that is related to accounting. So let's see what we are going to discuss today. In this video, we'll be basically discussing on the meaning of accounting, the basic terms of accounting, and finally the definition of accounting. Okay, so let's start with the meaning of accounting. So accounting is considered as the language of business. We all know the importance of language, right? So a language is used for basically for communicate something. So accounting is considered as a language of numbers that communicates the results of the business operations, like the day-to-day operations, maybe the business operations in the sense finally we will be getting to know whether the company earned profit or loss, what is the net worth of the company, what is the worth of the assets, and what is the value of the liabilities, etc. So we will discuss these all things in detail in the upcoming videos. So basically accounting is considered as the language of numbers that is used to communicate the business operations to the various parties who is interested in the business. So the interested parties may be the owners of the business, the creditors of the business, the bank which provided the loan for the business, the government, the suppliers, the investors, etc. Okay, so simply the accounting means it's a language of business. It is a language of numbers that explains the results of business operations to the various parties which is interested or who are interested in the business. Okay, and in short we can also say that accounting, it's a process of recording the business transactions in the book of accounts. A person cannot remember all the numbers or all the values that is related to business. Okay, it have to be get recorded. So they have to undergo a certain process. Chronological order of recording the transaction is very essential. So accounting can be treated as a language as well as a process of recording the business transactions in the book of accounts. Moving on to the next, that is the terms is which is used in accounting. This is some of the terms that is used in accounting because we have to get to know more about these terms because it is very important, because throughout the classes in the upcoming videos also we will be hearing these terms. So in order to make sure that you are getting to know about the meaning of these terms, I am going to discuss this thing. Okay, so let's start with the first term, that is transaction. So transaction simply means the action that is involved in conducting a business, or that happens when there is interaction between two or more people or two or more business parties. Okay, so the most important transactions that is included in the business is the buying and selling of the goods or the services. Okay, so in short we can say that any exchange that taken place by a business or by a person or by two or more persons can be considered as what? A transaction. Okay, moving on to the next term, that is capital. So the capital simply means the amount that is invested by the owners of the business to start a business. Okay, so if you think about tomorrow or the next month we are going to start a business. So whenever we are thinking about to start a business, some terms will be coming into our mind. We need cash, we need a place, we need a building, we need a land, we need some vehicles, we need some kind of machineries, etc. Consider these are the things that we needed to start a business. Okay, so for all these things we need to invest some money in order to purchase land, in order to purchase a building, a machinery, vehicles, furniture, whatever may be the things that we are going to start with. We need some amount. Okay, so the initial amount that is needed to start a business. So that is the same thing which is known as capital. Okay, so it may be in the form of cash, it may be the machineries, land and building, vehicles, furnitures, etc. Okay, so these all can be considered as what? The capital to a business. Moving on to the next, that is asset. So asset simply means all kind of valuable things which is owned by the business. Okay, so in the previous slide we have discussed about capital, in that we have seen machineries, land, building, vehicles, furniture, cash, etc. Even a bank account, that also can be considered as what? Asset to the business. So all sort of things which is valuable to the business can be considered as assets. And the assets are of two types, fixed asset and current asset. So fixed asset simply means the asset that can be used by the business for a long period of time. Some of the examples are building, furnitures, vehicles, the machineries, etc. Okay, and current asset means that kind of asset that will be within the company or within the organization for a short period of time. If I give an example like cash. So sometimes in the morning, in the sense at the opening time of the business organization, we will be having a amount of rupees 10,000. Consider it as an example. Okay. So we'll have an opening balance of rupees 1,000, and in the mid of the day we went to a market and buy some of the goods for worth rupees 300. Okay. So that is the expense that we made on this particular day. At the end of the day, when we calculate the balance amount, it will be like 1,000 minus 300 equal to 700. So within the day itself, the amount that is within our hand varies. That is why these kind of assets are known as current asset. So some of the examples related to current asset is cash in hand, cash at bank, the investments, the short-term investments that we are that made by the business organization. Okay. Moving on to the next, that is liability. It is also one of the most important term that is used in accounts or accounting procedure. So simply means the obligation of the business to persons other than the owners. Okay, so owners is also can be considered as, towards the owners also the business have some liability, but other than them, the business may be owing some money from banks or other financial institutions, or maybe from other individuals, or maybe from other business organizations. So it is the obligation of the business towards some other person or some other financial institutions or bank or other business organizations. So that can be considered as liability. So simple example that I can give yours, which is mentioned in the screen itself. Borrowing from a bank, borrowing a loan from a bank is also known as what? A liability to the business. Or borrowing some fund from a particular person, that also can be considered as a liability towards the business. Buying some goods without paying at the moment of purchase, it also can be considered as a liability towards the business. So these are some of the examples related to liability. Moving on to the next, that is creditors. So we have already discussed about the liability, right? So from whom we have borrowed the money. So if you have taken a loan from the bank, bank is the creditor. If you are borrowing or lending or getting a loan from a particular person or a financial institution, that financial institution or person can be considered as our creditors. If you are purchasing the goods without paying at the moment of the purchase, that person from whom we are purchasing the goods is also can be considered as a creditor. Okay, so it simply means the persons to whom the business owes money. Okay, so here it gives an example. ABC Company Limited borrows money from Mr. Raju. So here Mr. Raju is an outsider who gives money to the business or who gives money to the company. Okay, so on the point of view of the company, that is on the point of view of ABC Company Limited, Mr. Raju is creditor to the business, because at some point of time the company want to give back the money to Mr. Raju. Till the time, Mr. Raju will be considered as the creditor to the business. Okay. Moving on to the next term, that is debtors. Debtors, it's simply the opposite of creditors. Okay. So in creditors means the company want to give back the money to some other person or some other institutions. When we talk about debtors, those person who owe money to the business is known as debtors. If we take the example which is given over there, ABC Company Limited lent money to Mr. Arun. Okay, the company lent some money to Mr. Arun. So till the time when Mr. Arun gave back the money to the company, Mr. Arun can be considered as a debtor to the business. Another example that I can give you is, for example, Mr. Ram purchased some goods from our company. Okay, again, if we take an example of XYZ company. Okay, Mr. Ram purchased goods from XYZ company and didn't make the payment at the moment of purchase. Okay, that is, he agreed to make the payment after 1 month. So till the time he make the payment, okay, that is for the period of 1 month, he can be considered as the debtors to the business or debtors to the company XYZ. Okay, I hope it is very clear to everyone. If you have any doubts, you can ask me through the comment section. Okay, yeah. So that is all about the term debtors. Moving on to the next term, that is expense. Okay, so expense, usually it is, I think there is no need of much explanation related to expense. This is a term that we are usually using in our day-to-day life. Okay, so expense simply means the amount that spent on any item by a businessman to acquire the benefit out of it. Okay, for example, purchase of goods. So purchase of goods in the sense, sometimes, for example, if a person is doing a business like a stationery shop or something, so he will be purchasing some of the goods for the purpose of reselling it to the consumers, right? So he is making use of the goods in order to sell to someone else. So that is an expense to him. So if we are purchasing a goods from a shop or from a market for the purpose of reselling it, it is known as expense. If we consider some of the examples, if we take the example individually, like buying shoes, buying a shirt, okay, visiting an hotel and having a food from there, these all are considered as what? Expense, individual expenses. Okay, for organizations or business also there are some of the expenses. If we talk about the payment that is made by the organization to the employees in the form of salary or wages, that is also an example for expense. If you are paying the rent for the building in which we are conducting the business operations, that is also can be considered as what? Expense. The payment of electricity bill, telephone bill, water bill, etc. can be considered as an expense. For business organization also, these can be the expenses. Okay, moving on to the next, that is income. So income is just the opposite to expense. So income means the money received which is on a regular basis for a business or for an individual can be considered as what? Income. Okay, so the rent received means that comes into the business. Okay, so whatever income or whatever maybe the amount of money that comes into the business is known as what? Income. Okay, so if we are going to purchase something and the supplier of the product gave some discount, that also can be considered as what? Income to the business. If we are selling the goods to a consumer, the consumer will give back a amount related to that particular quantity of the goods, right? So that amount also can be considered as income. Basically, sales is considered as the major source of income to a business. Okay, I hope it is clear. Moving on to the next, that is drawings. So drawings is another important term, that is, it is the amount of cash or goods which is withdrawn by the proprietor. Proprietor simply means the owner of the business from the business for his personal use. Okay, say for example, I started a business like electronic goods items. Okay, electronic goods I'm supplying electronic goods, and for the purpose of office or for the purpose of the business itself, I have taken one of the laptop which is there for sale in my shop. That cannot be considered as drawings. Okay. On the other hand, if I'm taking a laptop in order to present someone, okay, in order to present someone, that can be considered as what? Drawings. Okay. And another example that I can give you is I've invested rupees 1 lakh for the purpose of business, but from this 1 lakh I have taken back rupees 20,000 for my personal use. That is called as drawings. So drawings can be happen with the goods as well as with the cash. Okay, so if the goods as well as cash is withdrawn by the owner of the business or by the proprietor for the personal use, that can be known as drawings. Moving on to the next, that is purchase. So purchase, we have already discussed the term purchase and expense. So it refers to the goods purchased by the business. Okay, whatever may be the goods that is purchased. So if we are if a transaction is mentioned like purchased goods, that will be recorded as purchases. If it is like purchased furniture, it won't be recorded as purchases, because that we will discuss further. But that is considered as an asset came into the business. Okay, so leave it. We'll discuss that in detail when we explain the rules related to accounts. Okay, so purchases simply means the goods that is purchased by the business. Okay, it can be done on cash basis or credit basis. So it simply means cash basis simply means if you are purchasing goods and at the moment itself we are paying cash to the supplier, that is cash purchase. If we are purchasing the goods but at the moment of purchase we are not paying the cash but agreed to pay the same on a future date, that is known as credit purchase or credit basis of purchase. Okay. Next is sales. Sales is just opposite. When the business sold out the goods to the consumers. Okay, when the goods are sold by the business to the consumers or customers, it is known as sales. It also can be on the basis of cash or credit basis. So at the moment when we are selling the goods, we are getting back the amount from the consumers, that it can be considered as cash sales. Whereas if the consumer is not paying the amount at the moment of purchase and agreed to pay that in a future date, that can be considered as what? Credit sales. Okay. And the delivery of a service for a cost is also can be considered as what? A sale. Okay. Moving on to the next term, that is goods. So goods simply means all the commodities, articles, products or things in which a trader deals with. Okay, in which a trader deals with. So whatever may be the sort of kind of goods, it have some kind of exchanges. Okay, say for example, if I'm running a stationery shop and I'm selling goods worth rupees 10,000 to another person. So here an exchange is taken place between the buyer and the seller in value of some money, right? That kind of things can be considered as what? Goods. So the things which are bought and sold by the business can be all sort of goods, all sort of things that is bought and sold by the business is called what? Goods. So in accounting, when goods are purchased, will be written as purchases. That I have already explained in the term purchases. When goods are sold, it is written as sales. Okay. Then it is written as a stock. If it is remain unsold at the end of the year. So these are the three important terms that is related with the goods. One is purchase, one is sales, and the last one is stock. Purchases means the goods that we are bought, that is known as purchases. The goods that we sold out, that is known as sales. The goods that is remain unsold in the organization at the end of the year is known as stock. Okay. Moving on to the next, that is accounting period. So this is also very important. After 2-3 videos, we will be discussing about the preparation of the financial statements. Okay. So in order to in order to prepare the financial statements, we have to know what is the accounting period is. Okay. So accounting period simply means a period of time that covers certain accounting functions, which can be a calendar year, but also maybe a week or a month or a quarter, etc. Depends on the organization, it varies. Okay, so accounting period are created for the purpose of reporting and analyzing the purpose. Okay, accounting period means it will be decided by the organization. Usually it will be a year. Usually it starts from the month of April and ends in the month of March. Okay, so it means that the current accounting period or the financial year is 2024. Now the year is 2024. Okay, 2024 April 1st April 2024 to 31st March 2025. Okay, starts from this year and ends in the next year. That is usually known as the financial year of the business. Okay, or the accounting period. Moving on to the next term, that is not the term, next topic, that is definition of accounting. Okay, so far we have discussed about what is accounting and what are the important terms that is related to accounting. In the upcoming videos, we'll be discussing more about the procedure that is undertaken in accounting. Okay, so before moving on to that, we have to know what is the definition of accounting. So if we are able to learn the definition of accounting, it is very easy for you people to learn the steps or the process of accounting. So let us go through the definition which is given by American Institute of Certified Public Accountants, that is AICPA, and they define accounting as the accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. I'm pretty sure that you didn't understand anything from this definition. So let us discuss that in different parts. Okay. So let us start with the first term, that is recording. Accounting is an art of recording. So what is happening in recording? So what we have to record in a business organization? So we have already studied the term transactions, right? So transactions may be the events that have taken place within the organization on a daily basis. If we take an example, we opened a new shop. So today is our first day. So a customer come and buy a purchase goods worth ₹1,000. So we have to record the same thing, because at the end of the day we may forget the same, right? So at the moment itself we are putting the date of today's and writing Mr. Raju or some other person purchased goods ₹10,000 or 1,000, like that we have to record. And immediately then another person came. Another person also bought a goods worth ₹5,000. So on the same day we are writing the same thing. Yeah. So we have to mention whether it is a cash purchase or credit purchase. And if we are purchasing from someone else, that also we have to record. Okay, so if some of the consumers come and purchase from us, it can be considered as sales. If we are purchasing something, that can be considered as what? Purchase. Okay, yeah. So every time when we are recording the transactions, we have to think from the point of view of the business. What is happening in the business? Whether business is purchasing, whether the business are selling the goods or making sales, or whether they are paying any kind of expenses, whether they have received any kind of incomes. So we have to think from the point of view of the business organization. In the when we are attending the exam also, sometimes a question will be coming like ABC company limited purchase so and so goods from this company. So ABC company, in the sense we have to think from the point of view of ABC company. We have to consider ourselves as the company. Okay, then only we can relate the things which is mentioned in the question paper. Okay, so recording simply means it is the basic phase. Okay, so with this phase other matters related to accounting starts without recording the transactions. So for example, if we forget to record something, it cannot be coming up in other process of the accounts. Okay, so that is why it is very important phase of accounting, the recording of the transactions. Okay, so recording is a basic phase of accounting, that is which is also known as bookkeeping. Okay, so in this phase what we are doing is we have to record all the financial transactions in a systematical and chronological manner in the appropriate books. Okay, there is an order for recording the same. We have to mention the date, we have to record the debit as well as credit aspect of the transaction, we have to mention the ledger folio, the number, that we will discuss detail, and the amount to be debited, amount to be credited, etc. Okay, so it simply means recording of all financial transactions. Only the monetary values, only the terms that we can verified or measured is recorded in the book of accounts. Okay, and this recording is done in a specialized book which is known as the book of original entry, and that is known as journal. And the process of recording the transactions in the book of journal is known as journalizing. Okay, so the book in which we record the transaction is known as journal, which is also known as book of original entry, and the process of recording the transactions in the journal is known as journalizing. Okay, so that is what is related with the term recording. Okay, moving on to the second term that is in the definition, that is classifying. How we are classifying the accounts in order, or on the basis of what we are classifying the accounts. Okay, so already in the book of journal we have recorded the transactions in a chronological order, right? Okay, so on the basis of that we have debited some accounts, we will be crediting some accounts. Don't get confused with debiting, crediting. We'll discuss that in the upcoming videos. Okay, yeah. So classification simply means we have to separate the accounts that originated through the process of journalizing. Okay, so when a transaction will be split into two parts. Okay, a transaction will be split into two parts when we are recording it in journal. That is, one will be like a debit account, one will be like a credit account. Okay, so one single transaction can give you a minimum of two accounts. Okay, a minimum of two accounts will be generated from one single transaction. Okay, so on the basis of the journals that we have prepared, we have to identify the accounts that we have to maintain. Okay, so some of the examples of the name of the accounts are cash account, sales account, purchase account, etc., bank account, etc. Okay, so the classification of each recorded transaction can be done with the help of ledger book of ledger or ledger accounts. Okay, and the process of posting or recording the accounts in the book of ledger is known as posting. Okay, the moving the accounts from journal to their corresponding accounts is known as posting. Okay, so in the recording we have studied the term journal. Journal means the book of an original entry where we are recording the transactions in a chronological order, and the process of journal writing it in the journal is known as journalizing. Likewise, the classification of accounts can be done with the help of ledger accounts or book of ledger, and the process of recording or transferring the journal accounts the accounts to the ledger account is known as posting. Okay, this can be asked as a MCQ question. Moving on to the next, that is summarizing, the third term, that is accounting is an art of recording, classifying, summarizing. So after preparing the ledger accounts, each of the account have to be summarized. the debit side as well as the side have to be totaled, and we have to find the balance figure for each of the accounts. Say for example, we have prepared 5 accounts named cash account, sales account, purchase account, bank account and capital account. All these 5 accounts have to be totaled. Both of the sides, debit as well as the credit side, have to be totaled, and we have to find the balance figure from all the 5 accounts that will be recorded in a book, in a statement that is known as trial balance. Okay, so summarizing can be done with the help of trial balance. So in this phase of accounting, it involves summarizing the data after each accounting period, maybe a month, quarter or a year. Okay, so the data must be presented in a manner which is easy to understand and used by both external and internal users of the business. External users may be the creditors, the investors of the business. Internal users may be the managers, the owners of the business, etc. Okay, yeah. Moving on to the next term, that is interpretation. So simply writing the details without analyzing or interpreting doesn't make any sense. We won't be able to know what the status of the business, whether they are earning profit or loss, whether they are going, whether there is a chance of growth or calling back of the business from the market. So we have to decide that things on the basis of the accounts. Okay. So this can be done on the basis of what? Interpretation. So whatever may be the balancing figures that is acquired, we have to interpret the data. Okay, so it simply means that is an attempt to determine the significance. Significance means importance. So what is each of the value have its own importance. Okay, whether it is good or bad, it have its own importance, because on the basis of that figures, the organization will decide for the future or plans for the future. So whatever may be the amount that is generating out of the accounts have an importance. Okay, so it is interpreting simply means to determine the significance and the meaning of data and values which is obtained at the end of the accounting period. Okay. So let's see the definition once again. I think after discussing the 4 terms like recording, summarizing, classifying and interpreting, we'll be getting an idea about what the definition is. Okay, so let's again go through the definition which is given by American Institute of Certified Public Accountants. That is, accounting is the art of recording, classifying and summarizing in a significant manner, in an appropriate way or a chronological way, and in terms of money. Only the monetary transactions are recorded through accounting procedure. Okay, the transactions and events, whatever may be the transactions or events that is taken place in a business, it should be recorded in a book of accounts only if it does give some value or in monetary terms. Okay, that means it have to be measured. That is the reason why we are mentioning or recording only the transactions and events that taken place in the organization that give some value or in monetary terms, which are in part at least of a financial character. Okay, it should have some kind of financial character and interpreting the results thereof. Then only it will be easy for the person who is analyzing the values or analyzing the accounts to interpret it. Okay, and come to a particular result. So that's it. We have so far discussed about the meaning of accounting, the important terms that is used in accounting, and the definition of accounting. I hope it is very clear to everyone. If you have any doubts related to any of the terms or any of the explanation which I have given, you can ask me through the comment box. Thank you for watching.